My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today our special guest is Michael Zaransky, and he is zooming in from Northbrook, Illinois, which is just part of, it's a nice suburb of Chicago. And Michael is the first person I've interviewed in over 1,200 interviews who is not only a third generation real estate entrepreneur, he's also, his company is an Inc500 fastest growing company in the US of A, according to Inc magazine. So Michael, welcome to the show. Great to have you.
Thank you, Dave. It's a pleasure to be here.
So give the folks at home a quick little snapshot of what does MZ Capital Partners look like? What does your real estate investing business look like these days?
Right. We are a firm that exclusively concentrates on the multifamily apartment investment business.
Mm-hmm.
We buy and acquire both existing stabilized properties and own and operate them. And we also develop and have developed over the years ground up construction properties, purchasing land, getting entitlements, and building and then stabilizing an apartment complex.
Do you have a particular market that you focus on, or is it kind of?
Yeah, we've been in exclusively in the United States. We have been in 7 states over the last 20 years, and we currently are focusing on 3 states: the state of Tennessee, state of Texas, and Illinois, which is our home base, the greater Chicago MSA.
And what does the portfolio look like right now, mid 2025? How many different communities do you have in those 3 states? How many units, give or take? What does that side of things look like?
We're operating 10 separate apartment complexes.
Mm-hmm.
And we're operating approximately 2,200 units.
Okay, very good.
We are in the process of pursuing a couple of acquisitions that are in various stages, that are in the early stages. One in the Knoxville, Tennessee market, and one in the city of Chicago.
Okay. Now, on the development side of things, what does that side of your business look like?
At the moment, it's on pause. We, because of the state of the capital markets, the combination of the high interest rate for construction borrowing, as well as the high construction costs, are finding that it's very difficult to make a new ground-up development deal pencil.
Yeah.
As little as 3-4 years ago, we were developing and did so very successfully. However, what we're finding in the current environment is the all-in cost to develop in our markets on a per unit basis, because of those escalating costs and cost of capital, exceed the actual finished stabilized value of the complex in today's capital markets. In other words,
that doesn't make any sense then, does it?
We could purchase a stabilized, newly constructed property based on today's market at a lower cost per unit than we can build it.
So when you're looking at acquiring properties, it sounds like you're not really looking to do much in the way of renovations and updates on the property. You want to buy something that's operating and functioning nicely right now. Is that correct? Did I get that right?
Yes, that's our current strategy. We have over the years really engaged in various strategies. We've done a lot of value add over the years where we've purchased and renovated units.
Yeah.
Currently, our focus is on newer built properties, 2020 and later.
Okay.
that we can acquire at below replacement cost, that really require very little renovation work. We do look for areas where there's opportunities to add value by better management, by revenue management, expense management, those types of things.
Okay, very good. And why did you guys decide to focus on that particular strategy versus value add?
I think we're at a unique point in time in the investment cycle, and we've seen other points where it doesn't make sense, where because of the dislocation of capital markets and some players sidelined with inabilities to purchase and others forced to sell,
Hmm.
because they have a capital partner that wants out, or because they're on a floating rate construction loan and they need to get out, that there's a unique, almost generational opportunity to buy assets at very low prices per unit. Not tons, but we're very patient. We only look to do one or two deals a year. And we look for those situations where we can take advantage of the stars being aligned right now for those types of acquisitions.
Yeah, that makes a lot of sense, Michael, for sure. Now, I believe your son is the fourth generation of your family who's
Yeah.
involved in real estate. Tell me a little bit about the backstory of if it was your, I guess it was your grandfather that first got into real estate investing and how that's kind of passed on from generation to generation.
Yeah, I think a lot of it's just in the DNA. I didn't know my grandfather. He passed away before I was born, but I
Yeah.
know of him and the stories of him, owning apartment buildings in Chicago, really local in the Chicago area. I was born and raised in Chicago. My dad always invested in apartment buildings. He went into the business with who my grandfather, who was his father-in-law. It's on my mother's side,
I
who
see. Okay.
generation before, and was an active entrepreneur in real estate. And I just naturally gravitated to it. Um, I grew up walking apartment buildings with my dad on the weekends, learned how to walk hallways and look for maintenance issues and other things like
Pick up rent checks and
pick up in the old days of
collections. Yeah.
checks, or of picking up handwritten applications that were filled out on site by the building engineer and the applicant and bringing them back to the office and
Yeah.
pulling a credit report and then coming back to the building with a typed lease for the person to come in and sign. Obviously, the business has changed since then,
Yeah.
and really just naturally gravitated towards it and learned to love the business.
Oh, that's wonderful. And you've passed that on to your son now as well.
Yes, yes.
That is fantastic. So Michael, what is your philosophy when it comes to multifamily investing? I mean, you've got generations of experience behind you at this point. Are you like when it comes to a property, are you like buy it and hold on to it super duper long term, or is it really market dependent and you buy and sell on a regular basis? What are your thoughts around that?
Yeah, we actually do buy and sell on a regular basis. We take advantage of cycles in the market. Um, when we own a property, even if we've owned it for 3 to 5 years, let's say, and the market, which we've seen over the years, gets supercharged with a lot of investing and cap rates compressed to very low prices. Um, we will sell and take our profits and wait for an opportunity like we're in now, where
Hmm.
pricing is depressed, and try and load up on assets and buy more. I learned over the years, an old lesson kind of stuck with me. I went to a lecture here in Chicago that the legendary investor Sam Zell spoke at. And Sam said, in the real estate business, every day you wake up, whether you realize it or not, you're making a choice whether you're buying or selling. And if you decide not to sell an asset that you own, that means you're buying it at today's price.
Hmm.
So keep in mind that if you don't sell, that means you're paying today's price for it. And if you're happy with today's pricing, or you think it's cheap, or it's a good basis to be in the property, you should keep it. But if it's a crazy, ridiculous price that the market's telling you could get, you ought to consider selling it.
That's a good lesson to stick. That's for sure. So, Michael, we were talking a little bit off camera at the beginning that you see real estate investing as a very entrepreneurial activity, and this is still tons of opportunity in this space. And you've taken your company to great heights. Being part of the Inc500 is a big feather in your hat. So, tell me a little bit about your thoughts about real estate and entrepreneurship.
Yeah, I think it's one of the last large businesses that is still really fragmented and owned by entrepreneur and family operators. Um, for all the press that the large REITs and some of the large property owners get, they really own a very, very small percentage of multifamily properties in America.
Hmm,
Most properties, well over, I think the number's well over 85 or 90% are owned by entrepreneurial firms.
really?
And yeah, it's also an opportunity because of the use of debt and the availability of debt capital from banks and other sources, and in multifamily here in the United States, Freddie Mac and Fannie Mae. It's
Hmm.
an opportunity for a capital source, a reliable capital source on the debt side, so that an entrepreneurial firm could put together the capital stack to purchase a multifamily portfolio uh, because of the availability of those debt sources.
Yeah, that makes a lot of sense. So, over your years now, decades working in this space, that gives you plus the family history and the whole thing, that gives you kind of a unique perspective on things. What do you think that you folks bring to the table that perhaps newer syndicators and multifamily folks don't quite have dialed in?
I think we are seasoned enough and comfortable enough that we pass on more deals than we go after. We look at everything. We look for strategic acquisitions and don't need necessarily to put out money and earn fees. We take our time and look for the right opportunity and pounce when that opportunity comes along. And we've learned lessons over the years of deals that have worked out great and deals that have worked out okay. And fortunately, only an occasional deal that hasn't worked out, but has served as a lesson.
Hmm.
Um, and we've learned that identifying markets that have the right demographics for renting and that have the right supply, uh, both currently in the market and planned for the market for the demand in order to keep full and to maintain rent growth. And we've learned to be patient and to be flexible and to change our philosophy, such as I talked about with development versus acquisitions.
Those are some huge valuable lessons, that's for sure. Yeah. So slow and steady seems to be kind of the motto, and then pounce when you find a really good deal, like be able to take advantage of that very, very quickly,
Yes,
and speed to deal is very, very important there. You're not you're looking for deals, but you're not chasing after them. Where do you see the company going over the next couple of years, Michael?
I think we'll continue to make good quality acquisitions over the next couple of years and add to the size of the portfolio. We've been at times in our history, we've had larger number of units under ownership at any given time. I do think a few years from now, development will probably make sense again in certain markets, and I'm sure we'll dabble in development where those opportunities arise and they pencil and the deals make sense. But I see us continuing to be in supply constrained markets at a really good basis with conservative amount of debt, just in case things, get a little soft in a market. We don't want to be tight or strained. And I see continued good things for multifamily.
Yeah, that's good. That's wonderful. So, Michael, as we're kind of wrapping up our conversation here today, are there any particular books or resources or podcasts or shows or what have you that really resonate with you these days when it comes to business, entrepreneurship, or real estate?
I like, I mentioned him already at a lecture, but Sam Zell wrote one book. Uh, I wish I knew the name off the top of my head, but they'll find it on, people could find it online by Sam Zell. And it's really his story about creating value and investing in real estate, and how to buy and sell real estate and build value. I think it's an excellent resource.
I'll
Um,
make sure I get that. That's for sure.
right. I would encourage people to really roll up their sleeves and dive in. And if they're a first timer, maybe just do a small um, building, a 2 flat, a 3 flat, even a single family rental home. Learn the business, get your feet wet, and experience what it's like in the trenches and go from there.
Good advice. Well, Michael, this has been a lot of fun. I think it's just so interesting that you've got such a long-term perspective being the third generation. I think your grandfather was busy buying and selling and managing apartment buildings at the time that Al Capone was running around in
Yes,
Chicago.
yes. In fact, he owned a building up the street from a famous El Capone shooting where they lined up guys across the wall.
Oh my good.
Yeah, it was
Was that what was the name of that shooting? God, my history's kind of crap. I know which one you're talking about though.
yeah,
Yeah, for sure.
yeah. I forgot it was named something. Yeah.
My grandfather was kind of on the other side of things. He was a rum runner for Capone in Canada of all places. He was
Really?
one of the guys,
Um,
or at least that's the rumor I heard. I don't know
yeah,
if he ever admitted to that or not. But
yeah.
anyhow, Michael, if people want to connect with you and find out more about what you're all about, where should they go?
Yeah, best way to reach me is by email, mhz Capital Partners, or through our company website, mzcapitalpartners.com. And then in the info, just say, please forward to Michael Zaransky.
Perfect, Michael. Thanks so much for being on the show. It's been a lot of fun.
My pleasure. Thank you for having me.
All right, everybody. Take care. See ya on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.